I call Stuart Nash.
Thank you very much, Mr Speaker. I rise to support the Insurance Prudential Supervision Bill 2009. The aim of this bill is to reform and extend the present law relating to the prudential supervision by the Reserve Bank of New Zealand, the insurance industry in New Zealand. What this bill does, Mr Speaker, is establish a licensing regime for insurers and prudential regulations with compliance largely self-administered while supervision is provided by the Reserve Bank. The bill will cover most entities that undertake insurance business in New Zealand, including life insurance, health insurers, captive insurers and the insurance activities of incorporated societies. Mr Speaker, this bill is important to the people of New Zealand for three reasons, and it is these that I will outline and elaborate on. The first is that this bill is another step in achieving clear, robust laws and regulations across the financial sector. The second reason is that it will provide a much higher level of scrutiny and security to New Zealanders with exposure to the insurance industry. And the third reason why this bill is so important is because it tidies up legislation around a sector where there is an unacceptable level of uncertainty at the moment. Tightening legislation, regulating an important sector of the financial industry and providing certainty are the three reasons why Labour is supporting this bill. This bill will provide confidence for all New Zealanders that their Parliament is working together to further protect their rights and their money. Mr Speaker, we all know that New Zealanders have lost a significant amount of money during this economic recession. New Zealanders who have worked incredibly hard, saved hard, dreamed, aspired, and should be allowed to live and retire with dignity. Those dreams have been taken away. There is an expectation that the courts will punish accordingly those that have perpetrated these crimes, but there is also an expectation that Parliament will put laws in place that will mitigate the risks of this type of financial destruction ever happening again. Mr Speaker, within the New Zealand financial industry, the insurance sector was not generally in distress like other parts of the sector, of the industry. Unlike the US, where one of the world's largest insurers, AIA, went bankrupt with dire consequences for their financial system. The global financial crisis did, however, demonstrate the vulnerability of the sector as a whole. Parliament has already legislated in several areas to tighten or make laws where there was a real deficiency in the financial sector. And this bill is just another step in ensuring that hard-working Kiwis can have confidence in the sector as a whole. And this is what I mean when I say that this bill is another step in achieving clear, robust laws and regulations across the financial sector. Not only is it sensible, but absolutely necessary in this day and age. And it is why we work together across parties on this legislation, because for once the National Party has put together a piece of financial legislation that actually benefits all New Zealanders. The compliance costs for the industry are not high, and the committee worked hard to ensure that this bill did not provide any level of competitive advantage to overseas firms operating in the New Zealand market. Having said that, the committee's main objective was to ensure that the regulations and rules governing the industry provided the level of security, transparency and accountability that New Zealanders now expect from any sector in the financial services market. The second reason why I support this bill, Mr Speaker, is because it provides a much higher level of security to New Zealanders with exposure to the insurance industry. Currently, New Zealand does not have a framework for prudential regulation and supervision of insurers. Current insurance legislation is outdated and inconsistent in its application across the diversity of the New Zealand insurance market. This bill requires most insurers to have a current financial strength rating that is given by a rating agency approved by the New Zealand Reserve Bank. There has been extensive consultation within the industry around the provisions of this bill. The Select Committee considered 57 submissions and heard 31 oral submissions from a range of industry and interested participants. A draft version was released for consultation well over a year ago. A draft bill reflected policy approvals by Cabinet in December 2007 and August 2008, a Labour Cabinet. Prior to this, proposals originated with the review of financial products and providers workstream. A discussion document was released by MED in September 2006, and a further consultation paper was released by the Reserve Bank in May 2008. This bill, Mr Speaker, had its genesis in the Labour Party. So what we have ended up with is a bill that requires all insurers operating in New Zealand market to be licensed and supervised by the Reserve Bank and to comply with minimum prudential requirements. The Reserve Bank will have the powers to act in respect of insurers who are in distress or in other difficulties. Having said that, Mr Speaker, in the end the new regime has been designed around a self-managing approach. For example, insurers are expected to devise and adhere to their own fit and proper risk management policies, subject to bank oversight. The cost to the bank associated with the insurance proposals, this is the cost of the Reserve Bank, are estimated to be in the range of $2.5 to $4 million per annum on an ongoing basis once the prudential regulation proposals for insurance have been fully implemented. Excuse me. The third reason why I support this bill is because it tidies up legislation where existed an unacceptable level of uncertainty. This is uncertainty for the industry itself and uncertainty for ordinary New Zealanders. Taking away that uncertainty is paramount for the New Zealand public to have confidence in this sector of the financial industry. The compliance costs for the industry are not high, and the committee worked hard to ensure that compliance costs were kept to a minimum. Now, the main areas covered by this bill are as follows. Licensing of insurers. Licensing ensures a consistent set of minimum standards is met by all insurers. The standards must be obtained to receive a licence, and once a licence is granted, an insurer is able to be monitored against those standards. This reduces the need for consumers to make complex inquiries regarding an insurance financial strength and other indicators. And this is a very important piece of the legislation, because what has happened in the past is ordinary, hard-working New Zealanders have actually not had the financial ability to wade through complex prospectuses and financial statements to determine for themselves whether an insurance company or any sort of organisation is in fact meeting the requirements necessary for sound investment. This licensing arrangement, monitored by the Reserve Bank, actually puts that in place, therefore protecting New Zealanders to a large extent. Insurers covered by the new regime will need to be licensed before the bill comes into force, and the bill will come into effect 18 months after it has received royal assent. After this date, it will be an offence to carry on or hold out that you carry on insurance business in New Zealand without a licence. This is why I say, Mr Speaker, that a high level of certainty has been granted to the New Zealand public as a result of this bill. There are other important parts in this bill as well. Risk management requirements, fit and proper requirements. For example, insurers will be required to consider qualifications, background and experience of key personnel. This lines up with another bill we passed in this House regulating the financial services sector. Statutory fund separation for life insurance and similar long-term insurance funds. Capital adequacy and solvency standards and appropriate financial regulatory reporting. Again, most important to all New Zealanders to ensure that they can have confidence in this sector. Insurer credit ratings, what I've talked about before. A supervision framework including effective distress management provisions. Mr Speaker, as I outlined, there are three reasons why I support this bill and three reasons why Labour supports this bill. This bill is another step in achieving clear, robust laws and regulations across the financial sector. We do not want to see ever again the carnage that was wrought by this last financial recession. Secondly, Mr Speaker, this bill will provide a much higher level of security for New Zealanders with exposure and investment in the insurance industry. And finally, the third reason is important because it tidies up legislation around a sector where there was an unacceptable level of uncertainty for both the sector itself and for New Zealanders. As a result of this, I commend this bill to this House. Thank you.
I call Pesata Sam Loto Iinga.
Thank you, Mr Speaker. Mr Speaker, I rise